Roku has been one of those stocks that people like Cathie Wood and many other institutions just can't stop adding to their portfolio. ARKWatcher.com lists them as their overall number 2 holding after Tesla, currently sitting at about $1.71 billion of Roku's $45 billion market cap. What's so special about Roku and why should we keep our eyes on them? Today we're going to take a look. With a 52-week price range of $58 all the way up to $363, around where we're sitting right now, we've seen a lot of drama with this stock price, but it's basically been a smooth kind of gain climb all the way up to where it is now. So today we're going to take a look at what Roku does, what's so good about them, some of their future prospects, and some of the reasons why people like Cathie Wood are so interested in them for the long term. If you're unfamiliar with what Roku does, basically they pioneered streaming onto your TV. And a lot of people naturally equate them to things like Netflix or Apple TV or things like that, but they're quite different because they don't actually produce their own content. And so they're not like a studio creating new shows or new movies or anything like that. Think of them more like the App Store on your smartphone. When you buy an app on the App Store, let's say it's an iPhone, when you buy an app, Apple's gonna take a cut of the money you're paying to the developer. And so Apple has set up a marketplace that allows you to find all these different apps. Roku is kind of similar to that. Another analogy you could make is kind of like a web browser, like let's say Google Chrome or Firefox or Safari or whatever. You use this as a platform to go look at different websites. Think about Roku as something like that. Think about them as the browser you go to look at all the different channels you're willing to be paying for. And when you sign up to Roku, basically you have this whole menu of different channels to choose from. Let's say recently they did a deal with HBO Max. Let's say you're like, I want to pay HBO Max for their services and their programming. Now Roku takes a little bit of a cut of that, and using the Roku streaming hardware, basically you have access to all these different shows now. So think about it more as like a platform rather than like a streaming service like what Netflix or Amazon Prime or Apple TV Plus are doing. Started back in 2002 by a guy named Cathie Wood, who was actually one of the VPs of Netflix. Roku was actually backed by Netflix starting out, and they saw the potential for having hardware that would be streaming all these different channels going forward into the future. And then eventually in 2017, Roku IPO'd. After the IPO, Roku partnered with a company called Magna, a media firm that focuses on advertising. And that's really where things started to take off as far as Roku's monetization strategy. And I think increasingly how we're going to see Roku start gaining more and more traction and bigger profits going forward into the future here. So in a minute here, we'll take a look at some of those numbers, how they're growing, as well as the future strategy. Interestingly enough, if you're one of those people who just follows everything ARK likes to do, ARKWatcher.com also mentions that ARK does have a small holding in Magna too, at $3.4 million. A couple of weeks ago, I did a video talking about how Apple and Facebook are kind of going through this battle together. If you want to hear more about that, click on the video up here. But basically, Apple is making a bunch of changes that put more of the privacy selection, privacy control in the user's hands. So whenever you open apps like Facebook that want to access all your other data, it'll pop up with a warning that says, are you okay with Facebook knowing this and this and this about you? If not, say no, and so these kinds of shifts going on in the industry are going to make advertisers who've been typically very dominant in the space, like Facebook or like Google, are probably going to start having a harder time going into the future because they may not have access to all the data that they previously have had to be able to provide targeted advertising. And so in Roku's case, in their partnership with Magna, they're learning a lot about their users based on what kind of shows they watch and based on what kind of things they're looking at. And they provide similarly targeted advertising, but probably much less invasive. And in a minute here, we'll take a look at how Roku is positioned in just the right place to capitalize on the shift away from major media companies spending lots of their advertising dollars on standard linear TV programming as well. So Roku not only makes money through advertising, they also make money through hardware and through licensing. And so for a long time, we would see their hardware basically like a Chromecast type USB stick that you just stick in your TV, smart TV, and then you can watch Roku on your TV. But more and more, they're starting to make partnerships with smart TV makers where the TV already includes Roku in it. And so when you turn on your TV, you're like, whoa, there's Roku on here, I guess I'll sign up. Cool, kind of thing. And for a lot of users, it ends up making sense because you're only going to end up paying, $12 or $25 for the shows you really want to be watching, rather than a traditional cable package, which might be something like 60 or 80 or 100 bucks. So Roku is now also putting out their own TVs, as well as various different versions of media players, including one which is like a big like premium sound bar speaker thing that also connects to your TV to provide Roku programming. And so for a long time, it seemed like their hardware division was basically like a loss leader, kind of like how you go to Costco and you're going to get a hot dog, but in your mind, you're kind of like, I want to go get a hot dog, so I'm going to go to Costco. Costco isn't making money on those hot dogs. They're getting you into the store to buy like hundreds of dollars worth of their other stuff. And that was kind of like what people thought they were doing with Roku's hardware kind of division. But actually, we're starting to see margins increasing now. I think as they're putting out like their 4K TV and things like that, we're going to start seeing that increasing even more probably going into the future here. On the remotes for a lot of these Roku players, they also have custom buttons. So Netflix or Amazon or Sling or Google Play, all these services are paying for that space on the remote. So rather than having to go channel up, channel up, channel up, channel up, you just go, oh, on Netflix, there's the button. And that's going to get Netflix more money as well. So Netflix is willing to pay for the space on the remote control. And so aside from big partners like Netflix, recently Roku and AT&T announced a partnership where HBO Max will finally be offered through Roku as well. In my AT&T video I did a little while ago, we talked a lot about some of the difficulties AT&T is having. It's one of those stocks where there are people who are just super loyal to it and they're just going to keep doing it for the dividends and they want more and more and more. And there are a lot of people who are just like, DirecTV, like stay away from that thing, oh my gosh. And controversially, the whole HBO Max thing as of late has also been one of those things where it's like, is it going to pay off? Is it not going to pay off? Do they have the budget to keep up with like Apple TV Plus and Netflix and these kinds of things? But in this new partnership with Roku, they're probably going to be able to get more traction and they're probably going to be able to bring more value to Roku as well. One of the really interesting things that we see, actually I talked about this in the Shopify video a couple weeks ago. If you're interested in that, check it out up here. Basically the idea of a flywheel where for Roku, like when Roku started out, it only had like a few channels, but the more users come onto it, the more other networks are like, I want to be on Roku to be seen by all of Roku's users. And the more networks are on it, the more they can charge for advertising, but also the more networks are on it, the more users want it. So you get this like cycle of like super awesome growth. And the more eyeballs are watching Roku, the more networks are going to be willing to pay for that specialized, customized advertising space too. And I think that's where we're going to see things growing up into the future. Check it out here. Yahoo Finance put out an article about this HBO Max partnership. And they highlighted a couple of analysts saying that they've raised their price targets to 410 and 380 bucks. Currently, we're at about 357. So some of these analysts are saying we still have even more upside. If you're not really sure who analysts are, don't put too much weight in what they say. I've learned from experience that a lot of them really just don't know what they're doing. So don't put too much weight in that, but it could be one of those indicators, If you're seeing a lot of analysts who are like, there's still room to grow, then probably, the company's not about to fall apart or anything crazy like that. So next I want to take a look at a couple of hypercharts real quick to give you an idea of how Roku has been growing. Check it out here. We have active accounts. We currently sit at about 46 million active accounts, and we see that growing basically every quarter, which is what you like to see. I personally was expecting a little bit more of like an explosive growth curve going into kind of quarter 2 and 3. But nevertheless, these are really good numbers. Another one of Roku's really key metrics to prove that they're growing is streaming hours. So we're seeing this bar go up and up and up. We didn't see as big a jump between Q2 and Q3 as I was kind of expecting, but 14.8 billion hours streamed. Isn't that an insane amount? So imagine how much advertisers will be willing to pay for that. And I think we can probably assume that this number is going to keep growing. But check out this jump between quarter 1 and quarter 2 when lockdowns were implemented. It went from 12.3 billion up to 14.6 billion. Next, I want to take a look at some of the financial statements. But first, I wanted to mention that ARPU's, average revenue per user, it's one of those metrics that's really, really important to see growing over the years for service companies like this, has gone up 20% year over year from about 22 bucks per user up to about 27 bucks per user. So that's one of those really key metrics, especially for a service like this, that you like to see growing like that. We also saw total net revenue increase 73% year over year to 452 million. Platform revenue increased 78% year over year to 319 million. and gross profit was up 81% year over year to $215 million. Check it out here, revenue segments. Like I said a minute ago, we have blue platform and red is player. So red is the hardware stuff. And we saw that bar we saw the red becoming a smaller portion of the overall bar until they started to release their 4K TVs and sound bars and all this stuff, where we saw that red bar get even bigger. And that's a trend we're seeing over the years. And then the blue is the platform. So like advertising and the portion of income that they're taking from all the other, like licensees and networks and stuff like that. And that blue bar is also generally getting bigger over the years as well, which is what we like to see. And alongside that, we finally saw a peak over here into operating income of 12 million, up from the negatives that it's been for a while, for a very long time actually. So the yellow bar is gross profit here, 214 million, which is getting bigger as well. So continuing on talking about the platform revenue and the player revenue, check it out all the way over here at the right, we have quarter 3 2020. Player revenue, year over year growth 62%. Platform revenue also 78%, which is great. But like I mentioned, down here, we're starting to see player gross profit up 224% year over year. That is like a really good sign to see. That being said, it's a much smaller portion of the revenues than the platform is, which is also up 73% year over year. Really good numbers. These are really what we like to see. Check out down here, platform gross margin at 61%, player gross margin at 15%, which is up from single digits or even negative in previous quarters. And then sliding down here, we have total gross margins, kind of just a general smooth march up over the last few quarters, with quarter 3 hitting 47.6%. I think it's safe to say that as the platform gets bigger and more advertisers are willing to be advertising on it, the gross margins will start to go up and up and up. Before we jump into the balance sheet, I want to do it the other way around today and actually start with the statement of cash flows, because there's something that looks a little bit tricky and might set off like a red flag in people's minds, but I was looking through it and I was kind of like, we should talk about this first before we jump into the balance sheet and see that cash and cash equivalents have gone up so much. So when we're looking at the statement of cash flows here, one of the things I wanted to notice, because it's a little bit tricky, is that when we look down here, we see cash equivalents, and restricted cash for the end of period. Last year it was 386,000, and it jumped up to more than $1 million. Well, actually, that's $1 billion, sorry, because I'm missing 3 digits. And so it's kind of like, whoa, where did they get all this money from? They must be raking it in. But actually what happened here, generally when you're looking at the statement of cash flows, you have operating activities, you have investing activities, and you have financing activities. So these are kind of the big 3 main portions of the statement of cash flows. But check out under here, financing activities. Proceeds from equity issued under at the market program, net of issuance cost. Almost $500 million. So it's not necessarily that their operating activities, all the things that they do to make money in their normal business, though those are up a little bit. It's not necessarily that they're kicking so much ass that all of a sudden they're making all this money. It's basically, as we see down here, that they just issued a bunch of stocks. And so jumping back to this hyperchart here, we can see kind of a steady flow of stock issuances going up. Last quarter, 1.22 million shares, and then this quarter, 1.25 million shares. So selling those shares is how they raised all that money. So that's not necessarily like anything to be worried about, but it's important to know when their cash position gets so much bigger all of a sudden, where's that all coming from? And so in this case, it's just selling stocks. If you're a long-term holder of the company, now your ownership of the company has become slightly smaller, which upsets people a little bit. But generally speaking, it's probably safer to have a bunch of cash on hand to continue growing and to continue stabilizing your position. Now we can go back and take a look at the balance sheet and understand where this cash and cash equivalents is coming from. So we saw last year it was 500 million. Now it's more than $1 billion. So that was kind of my biggest question mark, which is why we needed to go and do some digging into some of the other portions. But generally speaking, things look really good here. Check it out. We have total current assets versus total current liabilities down here. It's like 3 times. That's really dope to see. And similarly, total assets, more than 2 billion here. And similarly, we have total assets here, more than 2 billion, versus total liabilities here at 880 million. And so when we're comparing those assets to liabilities, when you see a really big gap in between them and the assets is way bigger, that shows you that the company is in a really strong financial position going forward. And next, I wanted to take a look at this little blurb that they provided in their earnings report, which give us a little glimpse into why so many investors like Cathie Wood are like so into Roku going forward into the future here. Ad business strength. In quarter three, we saw clear evidence that marketers accelerated their shift out of traditional TV and into TV streaming, precipitated by a 17% year-over-year drop in linear TV viewing among adults 18 to 49. When released from their annual TV upfront commitments, marketers took the opportunity to reallocate advertising spend more aggressively towards TV streaming. Take a look at this chart from Statista. It's pretty crazy. It shows television advertising spending in North America from 2000 to 2022. So the last three bars there are all starting to slowly melt down. And 2020 hasn't finished yet, so those are estimates. But it's pretty safe to say that we're going to start seeing advertisers willing to spend less money on traditional linear TV like where you just sit down and turn it on and they're feeding you stuff. Because they're going to start seeing less and less results and less value in advertising through those platforms. So we're going to start to see more and more shift towards more direct marketing, and that includes Roku. And as we're seeing from Roku offering more services, attracting more clients, more of that advertising spend is going to be switching over to Roku, probably in the foreseeable future. This advertising spend reallocation benefited Roku. Quarter three monetized video ad impressions grew almost 90% year over year, versus roughly 50% year over year in the second quarter. First-time advertiser clients more than doubled year over year, driven by performance marketers using our OneView ad platform, as well as TV advertisers focused on new products like incremental reach guarantees. For instance, DraftKings aimed to reach sports fans who had shifted TV viewing to streaming. DraftKings tripled its ad spend year over year with Roku, trusting OneView to engage consumers not only on the Roku platform, but also across desktop, mobile, and other TV streaming platforms. Jump down there to the bottom too. We have also seen that when TV advertisers shift spending to Roku, they tend to become return customers. 97% of TV advertisers that spend $1 million or more with Roku in quarter three continue to invest in quarter three of 2020. We've also closed 2021 upfront deals with all 6 major agency holding companies at significantly increased levels of commitments. And so little glimpses like this, they're saying, hey guys, we've made big deals for 2021. You're not going to see those numbers until those quarters are already completed. But looking at little notes like this and really reading into it shows you that Roku has a big runway for growth going into the future. And so right now the stock sits at about $350, $360, but we're still seeing ARK like adding more to their position. I think they've been in for a long time and they've made some really good gains. And so now Roku sits as their number 2 position behind Tesla, but they're still adding. So there must be some kind of value that they're seeing in this stock going forward, even though it's about to hit all-time highs. And when I sat down to kind of look at the numbers, if we were to continue to see user growth increasing, I mean, hardware, we don't even need to talk about the hardware because that's not really the main thing, but we are also seeing growth in that segment too, kind of like how Tesla also has all the solar stuff and battery stuff on the side that nobody actually calculates into any of their predictions for the future. The hardware side of Roku is big and it's important, but the advertising and the platform is going to keep growing. I think if we were to continue to see these growth rates going into 2025, 2028, 2030, it's actually not that crazy to imagine the stock price hitting something like $500 or $600 or $700. I've heard other people saying 800 or 1,000 as well. And I think it really is hard to predict how things will go as they start to branch into the international markets like Europe and Asia, because those are like totally different stories when it comes to all these big production companies creating translations and adding subtitles and all that stuff. And all those markets already have their built-in strong players. But I think we're going to see even more market penetration in North America, their biggest market by far right now, as traditional linear TV tapers off. And so for me, right now, I think Roku is like really, really interesting. Obviously, buying in at all-time highs, you're susceptible to market downtrends or bad news headlines or things like that. But I don't think we'll ever see stock prices like what we saw in March when it was down at like $50 at its low. I'm pretty confident that Roku is going to keep growing into the future. I personally don't have any Roku. This is the first time I've looked into it actually. It's pretty intriguing to me. I wouldn't go in and put a huge amount of my portfolio in it because I've seen it run up so much. but I'm pretty confident and pretty comfortable that if I were to put in a position in it, it would be good to go into the future over the next 5-10 years. What do you guys think about that? Looking forward to hearing your thoughts down in the comments. Love you guys and have a great one.